Income protection. So what that pays out is a monthly benefit. If you were to become sick or ill or injured and unable to return to work for a short or a long period of time. So the amount you can insure yourself for is up to a maximum percentage of your current income. And so depending on the insurance contract, anywhere between like 60 and 75% is what you can insure for. And sometimes you can include things like superannuation on top of that income protection payment. And with the income protection, there are a number of factors to factor in. So the waiting period, which is how long do you need to wait before you start getting paid? So if it's a 30-day waiting period, you need to be injured ill for 30 days from the claim. And that's not from the start of the policy. And the benefit period is how long will you be paid for? So if you could never work again and you've got an income protection that lasts for 2 years, a 2-year benefit period, doesn't matter if you're off work for longer than 2 years, you'll only get paid for that 2 years. If you have a benefit period till age 65, well, you'll get paid every month until age 65 if you're still unable to work that whole time. Some other factors with income protection is indexing claims or increasing claims. What that means is if you are on claim and receiving $5,000 a month, every year you're on claim, that $5,000 a month can increase with inflation. So if you're on claim for 40 years, or maybe not 40 years, but 20 years, your $5,000, if you don't have that feature, will be $5,000 in 20 years time. But with that feature, it'll increase with inflation. So it'll keep up with the cost of living. And the premiums for income protection, they can be paid through your super fund, and they can also be paid outside of your super fund. And if they are paid outside of the super fund, you will get a tax deduction either for the full premium or for a majority of the premium because it is a tax deductible expense. Which basically means you tell your accountant or you tell the ATO how much you spent on your insurance premiums and you'll be able to claim that back at tax time.